Greetings, everybody, and thanks for tuning in here. So, I want to talk about a way to get some trading ideas here in the financial sector. So, as we know, different sectors are in the driver's seat at different times, right? People spend all their time talking about tech, but there are, believe it or not, there are other sectors too. It's really been financials that have been in the driver's seat, I would say, over the last 2 weeks or so. But as we've been talking about, they're overextended and they're turning, and I believe there's going to be some ideas on the short side here, and that's what we're going to take a look at. So I don't mean actually shorting. I say that kind of generically. I would advise to buy puts as opposed to actually shorting the stock. I don't think I've ever shorted a stock personally. I have in my professional career, but never personally. It's just too much risk. If you invest in an option, the most money you could lose is what you invest. Like if your option position costs you $1,000, that's the most you could possibly lose. A short, you can short a stock and then tomorrow the thing gets taken over and you can end up having to come up with a lot more money than your initial requirement. Um, just want to point this out here though first, this ascending triangle pattern. Patterns are manifested, or what I should say is sometimes there's price action that manifests itself as something that looks like a pattern on a chart. This is the ascending triangle pattern. Now, let's not get all crazy here. Let's just think about what this is showing us. Well, it shows us that the sellers took a stand up around here. This is why the resistance line is horizontal. But the buyers got more aggressive as time is going by. This is why the line is ascending. They're willing to pay higher prices. That means the bottoms form at higher prices. Markets go in peaks and valleys, right? And when the valley forms at a higher level than the prior valley, we call that a higher low. So we're overextended. Before we go into the sector here, I want to just point out the 10-year yield could be on the verge of a big move higher, and that could be a good catalyst here. So this is the 10-year yield. And we got to remember that this is just the inverse of the bond. So if we go and we look at the bonds, this is what it looks like. We could be about to break this support. Now, this is an example here where we have seller's remorse. There's people who, oh, look at that. There's a little ascending triangle pattern there too. Same thing. But we have people that sold back here who regret doing so when the price went higher. And they say, if it ever gets back to my price, I'm going to buy my bonds back. So remorseful sellers from here placing buy orders over here. Right now that it's back to their level, they're trying to buy. So these remorseful sellers from here trying to buy back over here has created support in the market. Now we can go look at the financial sector, right? This is XLF. This is the financial ETF, sector ETF. And this is the aggregate of the sector. I mean, you could trade this, right? But you could also trade stocks that are within the sector. But as you can see, we've made the turn here, right? The blue team was in charge. Now it looks like the red team has taken over. Got a little bit of a gap down this morning here. Could be a little bit of a breakaway gap. So looks like we're turning. Here is our stocks that are within the sector. These are the top 10. So if we go through here, maybe we could find some ideas. You can see Berkshire and JP Morgan together are about 25% of this sector. And Visa is 7%. So you got a couple stocks here that dominated. Now, if you go down to Morgan Stanley, it's only 2.25%. But anyway, let's take a look at these guys here and see what we could find. So nothing going on in Berkshire, at least for a trading idea, but I just wanted to show it to you. Yeah, see, I don't really see anything there. However, when I look at JP Morgan, it looks to me like this thing is headed lower. So this morning we're down to about 221.90. I would say that this level here, we're going to call it 222.20. See, there was a decent amount of trading here. Most volume trades on the open and on the close. So you could see this was the closing price here, a closing price here, opening price here. So there's probably going to be some support around 220 because that's where a lot of volume traded. Now, if we start to break below this, there's a good chance we get a pretty rapid move lower. One of the main reasons why we get support in a market is because you have remorseful sellers trying to buy things back, as we just kind of saw, right? When you rip through price levels really quickly like this, you don't spend a lot of time at these prices, so there's just not a lot of trading there. So there's probably not going to be too many buy orders if we get back to these price levels going in the opposite direction. So I would say if we get to 221, that's probably where I would throw on some puts. And my target price would be down around here, around 215. All right. So that looks pretty interesting. Visa also looks like a potential short idea here. Yeah, I mean, this is definitely turned, and you can see this is even kind of refilling. Here's an example of a gap that's refilled. This is a really actually a good example. There's a lot going on in this chart. One of the main reasons why we get resistance is because we have remorseful buyers trying to sell stuff on the way back up to get out of break even. In other words, someone buys something at 20 and it goes to 15 and they say, well, if it gets back to 20, I'm going to sell. When you gap through price levels, there's no trading, right? This was the closing price. The next day, this was the opening price. If there's no trading, well, there's no one who bought who's going to be trying to sell on the way back up. So when we get back to those price levels going in the opposite direction, the buyers have a hard time finding sellers. So they're forced to be willing to bid premiums. And that forces us up into this uptrend. So now we got the opposite thing. We're going to get back to these price levels where there isn't much vested interest. Oh, look at that. We just opened down. Um, yeah, there isn't much vested interest. So there's a good chance we fall right back through these levels. So my target here would be about 280. So about $5. And here's an example where we get to a level that was resistance before. This is also driven by remorse. We have people that bought up here who regret doing so when the price fell. And they say, I made a mistake. If it ever gets back to my price, I'm going to get out at break even. So remorseful buyers from here placing sell orders over here made the level that was resistance before become resistance again. Now, the next thing that goes on is some of the sellers start to say, hey, there must be other sellers coming around here. That's why the price isn't going any higher. I know the buyers are going to go to whoever's willing to sell at the lowest price. So I'm going to reduce the price I'm willing to sell at. Other sellers see that and they do the same thing, and you get a snowball effect. This is why sometimes you sell off of resistance. All right, let's just go through some of these other guys here. Remember, the best traders let the market tell them what to do. I mean, they don't force it. MasterCard looks weak, but not enough for me to get too excited there. Bank of America and Wells Fargo. Yeah, this looks pretty weak here too. Again, we're getting back to a level that we ripped through pretty quickly. So I think that this looks like a pretty interesting idea on the short side right here. My target would be around, well, there's probably not that much though. We probably only got about $1 a downside. All right, so let's move on. Wells Fargo, WFC. That looks kind of neutral as of now. Hasn't really made the turn yet. Goldman Sachs, American Express. Yeah, now it looks to me like Goldman is going lower, but I think there's kind of limited. Well, let's see here. I would say my target would be about 510, and it's about 515. So maybe $5 or $6 downside there. This looks like it's kind of going lower as well. American Express and Morgan Stanley. Remember, they're the same sector, so they're all going to have somewhat of a correlation. May not be too big. Yeah, look at that. Amex has already fallen. So this got to what would have been my target. So nothing to see there. And then Morgan Stanley. Well, look at that. This looks like it's got some downside in it here. Now, my target here would be if we were to get below this price, the opening price here from Wednesday, right around 117, that's where I would jump in. Don't worry about catching the exact top. I mean, we already have missed it, but it's not about being precise. It's about making money. My guess is that if we break this support, next stop is probably down around 112. All right. Hopefully that helps everybody. Just remember, let the market tell you what to do because it is never wrong. And I will talk to you soon. Thanks, everyone.